The year is 2025, and Bitcoin has once again captured the world's attention. The digital currency, which has been a subject of fascination and speculation for over a decade, is now at the forefront of financial news and discussions. After surging past $100,000, many are eagerly anticipating the day it reaches a new all-time high. This milestone has not only excited seasoned investors, but also attracted a new wave of enthusiasts who see Bitcoin as a revolutionary financial asset. The magic number? $150,000. This figure has become a symbol of Bitcoin's potential and the transformative power of decentralized finance. This target, while ambitious, is not without merit. Analysts and experts have pointed to various factors that could drive Bitcoin to this new height, including increased institutional adoption, technological advancements, and a growing acceptance of cryptocurrencies in mainstream finance. Bitcoin has consistently defied expectations, proving skeptics wrong time and time again. Its resilience and ability to recover from market downturns have solidified its reputation as a robust and enduring asset. Yet the path to $150,000 is not a straight line. The journey is fraught with volatility, regulatory challenges, and market fluctuations that can create significant hurdles. Bitcoin, like any asset, is subject to market forces, investor sentiment, and global events. Economic shifts, geopolitical tensions, and technological disruptions can all impact its price trajectory. Understanding why Bitcoin hasn't reached this milestone yet requires a deep dive into the current market dynamics. We must consider the interplay of supply and demand, the influence of major market players, and the broader economic environment. We need to analyze the forces at play, both bullish and bearish. Bullish factors include increasing institutional interest, technological advancements, and a growing acceptance of Bitcoin as a store of value. On the other hand, bearish factors such as regulatory crackdowns, market manipulation, and macroeconomic instability can pose significant risks. This essay will explore the factors influencing Bitcoin's price trajectory, drawing insights from industry experts like Michael Saylor and Robert Kiyosaki. Their perspectives provide valuable context for understanding the potential and challenges of reaching the $150,000 mark. We will delve into institutional adoption, government actions, and technical analysis to paint a comprehensive picture of Bitcoin's journey towards $150,000. By examining these elements, we can better appreciate the complexities and opportunities that lie ahead for this groundbreaking digital asset. Michael Saylor, the CEO of MicroStrategy and a prominent Bitcoin advocate, offers a compelling theory for Bitcoin's current price point. He has been a vocal supporter of Bitcoin, often highlighting its potential to revolutionize the financial landscape. His insights are particularly valuable given his extensive experience in the tech and finance sectors. He posits that the market is undergoing a rotation. This rotation is a significant shift in the way different market participants are interacting with Bitcoin. It's not just a simple buy-sell dynamic, but a more complex movement of assets between different types of investors. In essence, short-term holders, often driven by fear and speculation, are selling their Bitcoin. These individuals are typically more reactive to market volatility and news cycles, leading them to make hasty decisions. These sellers often lack a fundamental understanding of Bitcoin's long-term value proposition. They may not fully grasp the underlying technology or the economic principles that make Bitcoin a unique asset. This rotation, however, is not a cause for concern, according to Saylor. He believes that this is a natural part of Bitcoin's maturation process as an asset class. He argues that these short-term sellers are being replaced by long-term holders. These new participants are more knowledgeable and have a deeper conviction in Bitcoin's future. These are institutions, corporations, and individuals who recognize Bitcoin's potential as a store of value and a hedge against inflation. They are less likely to be swayed by short-term market fluctuations and are more focused on the long-term benefits of holding Bitcoin. This shift in the investor base is seen as a positive development for the stability and growth of the Bitcoin market. Short-term holders, as Saylor suggests, play a significant role in Bitcoin's price volatility. These are often individuals or entities who entered the market during periods of hype and rapid price appreciation. Their investment horizon is short, and they are quick to sell at the first sign of a downturn or when they achieve a desired profit margin. This behavior can create downward pressure on Bitcoin's price, especially during periods of uncertainty or negative news cycles. However, it's important to remember that this selling pressure is often temporary. As long-term holders accumulate more Bitcoin, the influence of short-term holders diminishes. One of the most significant developments in the Bitcoin market in recent years has been the influx of institutional investors. This is evident in the surge of Bitcoin ETFs, or exchange-traded funds. These investment vehicles provide a regulated and accessible way for institutions to gain exposure to Bitcoin without directly holding the asset. BlackRock, the world's largest asset manager, has been particularly bullish on Bitcoin. Their iShares Bitcoin Trust, or IBIT, has amassed billions of dollars in assets under management, signaling a strong institutional appetite for Bitcoin. Section 5. State adoption and the U.S. Bitcoin Reserve. Governments around the world are also taking notice of Bitcoin. In a surprising turn of events, the U.S. government established a strategic Bitcoin reserve in 2025. This reserve, composed of Bitcoin seized from criminal activities, highlights a growing acceptance of Bitcoin within the highest levels of government. Furthermore, states like Arizona and Texas have made headlines by adding Bitcoin to their treasuries. This move, championed by pro-Bitcoin politicians, further legitimizes Bitcoin as a store of value and a potential hedge against inflation. Section 6. MicroStrategy, a Bitcoin fortress. No discussion about Bitcoin would be complete without mentioning MicroStrategy. Led by Michael Saylor, the company has become synonymous with corporate Bitcoin adoption. MicroStrategy holds a staggering amount of Bitcoin on its balance sheet, effectively making it a bet on Bitcoin's long-term success. This bold move has not gone unnoticed. Other corporations are now considering following in MicroStrategy's footsteps, potentially triggering a wave of corporate Bitcoin adoption. Section 7. Robert Kiyosaki. Bitcoin's bright future. Robert Kiyosaki, the renowned author of Rich Dad, Poor Dad, is another vocal proponent of Bitcoin. Kiyosaki views Bitcoin as a hedge against what he sees as inevitable inflation caused by excessive government spending and monetary policy. He predicts that Bitcoin could reach $1 million by 2035. While this prediction is bold, it underscores the growing belief among some investors that Bitcoin's value will continue to appreciate in the coming years. Section 8. Technical analysis. Bullish signals abound. Technical analysis of Bitcoin's price charts also paints a positive picture. Bitcoin broke out of a bearish trend line in early 2025, signaling a potential shift in momentum. The subsequent formation of a bullish channel suggests that the path of least resistance is to the upside. While technical analysis should not be the sole basis for investment decisions, it provides valuable insights into market sentiment and potential price movements. Section 9. Conclusion. Patience in the face of potential. The question of why Bitcoin hasn't hit $150,000 yet is complex, with no easy answers. Many factors contribute to this, including market volatility, regulatory changes, and investor sentiment. However, by examining market dynamics, expert opinions, and technical indicators, we can gain a deeper understanding of the forces at play. Market dynamics include supply and demand, trading volumes, and liquidity. Expert opinions often highlight the importance of technological advancements and macroeconomic trends. Bitcoin's journey is far from over. It has already seen significant growth since its inception, and many believe it has the potential to go much further. While short-term fluctuations are inevitable, the long-term outlook for Bitcoin remains positive. As institutional adoption grows, governments embrace Bitcoin, and more individuals recognize its potential, the market is likely to stabilize and mature. And individuals recognize its potential. The path to $150,000 and beyond becomes increasingly clear. This journey requires patience and a long-term perspective. The path to $150,000 and beyond becomes increasingly clear. Investors need to stay informed and be prepared for the ups and downs that come with such a volatile asset. Patience, as always, is key in the world of investing, especially with an asset as revolutionary as Bitcoin. Understanding the broader context and staying committed to your investment strategy can make all the difference in achieving long-term success.